Hey folks, how about a sound check? All right, sorry about all the confusion, folks, about being live, doing a produced video. Just kind of crazy tonight. Excellent. We'll get started here in just a couple of minutes. Welcome everyone. I tore down the studio to do the produce videos. I had to change my studio around here, so I couldn't get the side camera to work and the way I usually do it. So anyway, welcome to the Kindle Report. Quite a day yesterday. Don't just before you get too interested in what I'm doing here. I do need to make a couple announcements. There's not going to be a video tomorrow night. Unfortunately, I had something come up. I have to be out of town tomorrow, and I'm not going to be back in time to be able to do a video. And certainly, if I did make it, I wouldn't have any energy to left to do it. So have commitments on Friday with the live room at 1 o'clock. So what I might do, if I can fit it in, is maybe do an hour live on Friday morning and update whatever's going on then. We'll have unemployment out. So we'll try to fit this together the best I can. So I appreciate your patience with me. And of course, this is a free channel. I guess you get what you pay for, right? So anyway, so let's, one of the other reasons why I'm getting started even a little later right now is the database. After a big day in the market, for whatever reason, our data vendor, it takes longer for us to get delivery of the data. I don't know if they have to cleanse the data or what they do before they deliver it. But so that got there. So it just literally like 6-7 minutes ago it finished. So that's why I clicked the live button. So couple things. A couple days ago I put a video out, market to accelerate. It printed an all-time new high and then reversed. And now we've got some interesting patterns going on. The title of this is, is really it's all about the Fed, right? The Fed has completely crushed the market. And why is that? Did the Fed do that? Normally the FOMC minutes are pretty benign. I think in last night's video when I mentioned it, I was talking about it just being, well, that'll be out. I don't expect any surprises. Maybe there might be a couple nuggets in there. Well, that was the understatement of the year, to say the least. It was interesting because in the live room today, we had the screen lit up and traded throughout that entire session. Did fairly well on the day, and so we got to watch every tick for 3 hours. So that it was kind of fun, actually. There were a couple real fun trades that came off. Anyway, so one of the things that I did a video, I think it was maybe the last couple weeks of December, how the Fed has lost control. Well, now what's happening, I've never seen anything like this, actually. We're listening to the Fed talking about, pulling money out of the market or downsizing the balance sheet at the same time which they're expanding it. Never seen that before. So we're putting money in, but we want to take it out. I mean, if that doesn't tell you they have no clue what's going on or what they're doing, nothing will. And I think a lot of the sell-off today, in hindsight, just thinking about things, looking through the world, reading a few things and watching some of the talking heads around, I think really what happened was just that. This is a loss of confidence. And the tough part to figure out at the moment, is this like the big event? Is this the top of the market and we're going to start the 10, 20% decline, all that stuff? I'm going to go through all the technicals here in a few minutes, and it just doesn't look like that's what's in I guess in store for the markets from that standpoint. There's still a lot of good underlying trends. One thing that somebody brought up that is also a WaveTech user in the live room today is that our database has been telling us a lot about what's been going on. The intermediate database only has 3 out of 10 stocks long, and it's very narrow, and we continue to float up on that narrow range, and I'll go through that when we talk about the database here in a minute. But I've never seen the Fed talking on both sides of their mouth. Well, we're still going to taper, but then we want to, take money off the table faster and downsize the balance sheet, right? And if you recall, I've talked about this before. Bernanke told us in 2010, early 2010, that he was going to get the balance sheet back under $1 trillion and all of that stuff. Well, here we are a long ways from that, 9 trillion plus. So this is, I think, an interesting scenario. Not only have they lost control, they're telling the world they have no idea what's going on. And I think the spike in interest rates, I'm going to try to unpack all this stuff. I'm just going through all of the elements of what I was looking at coming in to getting ready for this broadcast. And it's just pretty amazing. The other thing is, I saw somebody talking about, well, the Fed was behind the curve. They said that inflation was transitory. And I've been telling you, this is the other thing I want to make sure I bring up tonight, is not only did they miss that, but now I think it might be transitory. I think maybe inflation is peaking. You look at I've talked about this over the last month off and on, that the shipping indexes are down like 50%. So the cost of shipping, everything's going down. So something's working, or maybe things you're not getting gouged as bad as you were before when they could play that out. So a lot of things have changed from the standpoint of the shipping going on. I talked about my trip down I-10 heading into Texas a few weeks ago, and it was absolutely insane what was out there. So the economy is doing well. We saw, just to bring this in, ADP came out 807,000 jobs, and it was expected to be 450. But that ends up to be a negative, because now it's obvious that the Fed needs maybe the economy's overheating all of a sudden. So it's pretty confusing right now from the standpoint of trying to put a scenario on this thing. So in moments like this, as always, I'll go to the technicals. I'm going to go through the database here in a minute. I'll talk to you about some of the things that I'm seeing there that might be a clue to what's actually going on, because I ran into some analogies as far as what happened in 2020 and what might be going on right now. Let's go ahead and start to look at the database here. Before we actually do that, let me just finish. One of the other things that happened, and I'll go through all the details in a minute, is that the 10-year punched over 170, but the yield curve didn't steepen, and this is a really, really bad sign. And this is another sign that the Fed is losing control as well. So, yesterday was a crazy day. S&P was down 1.94, Nasdaq down 3.34, and the Russell down 3.3. So the Russell Nasdaq spread, no gain there. So all of this higher yield stuff really hammered the Nasdaq and the Russell pretty good. And of course, I can't go without mentioning ARK-K trading down to 86. I have targets now on Kathy Wood's strategy for it to go to about $72 to $68, and that puts it back to around the 200 week moving average. So that's a bad sign. And it's odd that just last night I spent time in the video talking about all of these meme stocks and these so-called growth stocks, and that bloodbath just continues there, and it doesn't look like it's going to end anytime soon. Looks like there's more carnage there. And so the whole interest rate scenario that's happening, I was talking to you, I believe last night or the last couple of nights, it kind of blends together, is that the weekly 10-year chart is signaling now the possibility of a minimum of 190 and the possibility as high as 2.25. So let's take a look at the database and just kind of zoom in on where we are here. So what we've got here is 2,726 sell signals, 190 buy signals, so huge negative rotation. Database is down to 40.70. I talked about this last night, that as long as we stay above 42%, the market should be able to come back and I guess consolidate and set up for a move higher. Now we're 40.70. I do expect to see a bit of a rebound. We got STX buy signals across the board. I'll show you in a couple minutes. But this number is big. And once again, if I go back, and this is just in my mind, but we went up to about 54%, declined all the way down into 20% range on the short-term daily base. We went up to about 52 and down. This time we got up to 48, and now we're starting to decline. So if we get below around 28% on this short-term database, then we're going into full liquidation mode, and we'll know more about the markets then. From a technical standpoint, as I'll show you in a minute, there's still some support levels, and we actually traded right into support at the S&P closed right on support yesterday, or today as far as that goes, since this is Wednesday evening. So as far as anything really to pull from this is just that we're starting in a negative rotation, just like that in one day. The next couple of days will tell us a lot. I'll do my best to get things up. I'll try to put some tweets out. If you're following me on Getter, you can follow me over there as well. I'm Wave Tech. That's my handle on Getter. So let's take a look at some of the technicals on the market and start to get into we're down 3.25 handles right now. This is the weekly, so let me get over to a daily S&P. Get full screen for you. You'll see right here, we got the STX sell signal. We did close under the 21 period moving average, which was quite surprising to me that we're able to get through that. The 40 is the last stand, 46.70. I'll show you on the weekly chart here in a few minutes. There's another number right around this 46.60 level. Pretty amazing, because just yesterday we printed an all-time new high. So right into the moving averages. We've seen this type of action before from the standpoint of falling back into these moving averages. And that's going to be important, and that's why I'm going to set up the range for today, for Thursday, and that range is looking at, right now we've had an 81 low, 47.03 high. R1's 47.07. I think we're going to potentially go to R2. S1 46.77. That's a big number. That's right at that 40 period moving average, or right around there, 46.70, 46.77. So that there's some hope there, but with the PPMs crossing through first second derivatives, they've completely rolled over on the daily. Let me put up some Fibonacci projections. I'm going to do a couple things here. Let me just put some things up here. I just want to see real quick here. I just want to see if we're getting a sell signal on the logic here. Yeah, nothing yet. So there was a buy signal that came out at 47.17, and it's still holding that trade so far. So this is going to be interesting, especially with these PPMs crashing through like they have here. So let's go to the weekly chart. Let's talk about support levels. The 10-week moving average, 46.64, very close to that 46.70 level on the 40, and also the S1. So it looks to me that there's really solid support here. PPM 1 is up at 0.21, PPM 2 0.26, and PPM 3 at 0.40. So the intermediate trend, as ugly as yesterday felt, in the last 2 days, we'll call it, there is good support here. It doesn't look like a typical rollover. At least there's going to be substantial amount of support right here at 46.60. The number that you would watch from the standpoint of a key pivot number would be way down at 45.50. I don't see that getting into play, which is the 21-week moving average. We get through 46.60, then that's your next level, down to 45.50. There's just not going to be any hope if that number is taken out. Let's go over to the S&P cash. That's the other thing that I want to mention here on the weekly. If you remember, I was talking about this week is a cycle, and coming in, there's been 2 cycle events. If we look back on the last 2 years almost, we had a cycle in May of 20. So May 2020, we had a cycle low. I remember everybody telling me I'm crazy and the market was going to go down, make new lows, the end of the world was coming. So that was our last cycle. Now we've got a cycle that's coming in right now, and I've explained this cycle finder before. It actually looks for multiple cycles. It projects from every pivot point a Fibonacci sequence from all the way out to 144, and it looks for clusters. So there's got to be 3 or more cycles hitting at the same point. You can see this chart here, we're looking back to 19. There's only 2 on this page that have come into play. And so this is significant, I think, from the standpoint of what's going on with the market. So this could end up to be a fairly major high, but I think the support at the moment, I'm thinking that the support at the 21 period moving average, 45.68 would be the most that we'd see a decline from these levels. And since we're down a couple percent, that would be 5-6% level, right in that range if we get down there. But the expectation is that we're probably going to be able to hold right in this level right here. Something else that if we look at the market grid for the weekly, this is the S&P cash now, the 46.99.44, we're looking at 46.96.78 is S2 weekly, and we've traded above R1. So we actually had a high this week of 48.18. So that was an all-time high. And then so we're getting a couple things, and I want to point this out. I'm hoping that I have a chance to talk to you folks before the weekend. I'm not sure how it's going to work out, but the thing I want to set you up for to watch for here is we have an outside reversal. We had one of these several weeks ago, if you recall, and I always look at this outside reversal as an opportunity. So we do have some potential here for that to set up. I always point you to the how to short Apple video on the channel. If you go there, and you'll find that there's a 3-day trade. In this case, it'd be a 3-week trade. And we tried setting one of these up several weeks ago, and we got a reversal and it got negated. So I'll try to set this up on Twitter if I can't get at least to do a show on early Friday morning. So this would probably be before noon. Before noon on Friday, if anything happens. All right. So this is a key event to look for. Let me just put the daily up here and look at the market grid. Just 2 days ago, it printed up. We saw it sloping up, and now we've reversed it. We do have an STX buy signal. Typically, that tells us we'll do the opposite side, R1, R2. That's 47.14, 47.30. So we should see somewhat a little bit of a rebound, I suspect. On the downside, 46.86 is that number, and 46.79 is the 40-period moving average. So look for probably an S1, R2 on this for tomorrow. But let's take a look at the weekly chart back again just for a minute. The thing I just want to point out here is that we are seeing the PPMs also roll over. PPM 1, 2, and 3 are actually below their first, second derivatives. So there is definitely some risk in a top setting up here. I think we'll see a little more evidence. Those of you that use our software already know that probably 40 to 60% of your money is in cash right now. And I see somebody saying cash loses will lose 5% a year. That's true, but you can lose a lot more owning some of these stocks. All you got to do is buy the wrong stock, and you'll lose 20%. So the bottom line is, when I talk about being in cash, we're talking about short-term rotation, and cash does work, and I get the inflation scenario there as well. But sometimes taking market risk doesn't. You don't take market risk because of inflation within the inflation context there. So let's move on and let's get to the Nasdaq. Is just traded positive. Let me get over to the daily. You'll see here as well, we got a daily STX buy signal, suggests we're looking at R1, R2, 15,857, 15,969. What's interesting here is we do have, this is the daily, we do have the market actually getting into a trend mode down, because PPM1 is at a minus 0.24, and that just tells us there's going to be a lot of resistance. We just go back 3 sessions ago, we'll call it 2 sessions, this is the beginning of the third. We were trading, I remember talking about this a couple nights ago, or actually last night, that looks like we should hold this, and then once we broke through these levels, we saw the PPMs just get crushed. And meanwhile, if we were to look at if we look at any of the other scenarios on the market from the standpoint of momentum, we're still not seeing any sharp, acceleration just yet on the PPM 2 and 3. PPM 3 is actually trying to turn up. Let's go over to weekly, because I think all of the explanations right now are on the weekly charts. Here's 21-week moving average, 15,693, low 15,710. So we came right down toward that number, and this should hold here. We've got a PPM value of 0.20. It's actually positive. There should be enough to hold that, and ultimately maybe a bounce back toward the 16,140, back toward this 10-period moving average, which is currently 16,143. But if we look at the market grid for the weekly, 15,983 is S2, 16,161 would be back to that level. If I recall talking about this, that I thought we'd see maybe an S1 R2 this week. Well, we we saw a basically almost an R1, and so far we've been down to 64. So we're actually almost at the bottom end. 15,645 is STX, and this is weekly. But if you notice here, the Nasdaq is much weaker, and it's starting to roll over pretty good. All the PPMs are rolling fairly substantial. One of the other things that I want to discuss, and we've seen this before, that the volatility monster, when we start to see 100-point days in the S&P, it takes multiple days for that momentum to contract again. So expect it can get scary, but there should be some really good trading opportunities intraday with this volatility kicked up. Especially I think we did trades against S1, S2, S3, and SDX yesterday, doing counter trend trades, and managed to scalp off a couple. Had one trade that worked out really well, but you should be some opportunities around this volatility, and possibly you'll be able to catch some of this stuff if you are doing that type of trading. But this volatility will be kicked up for at least 3 to 5 days. This is coming into Thursday, Friday, into early next week. It's not going to change. So probably starting on Sunday night, we'll see plenty of action. So we just went from, we're up here right now, 15 handles right now. So we were just up 1. So it just rallied pretty sharply. But I do expect to see this market, because of the STX buy signal, see it start to improve a little bit. Let's take a look at the Russell. I didn't cover the Russell last night. This is weekly Russell. We're still in that bubble formation, and the PPMs are all rolling over. We've got negative PPMs. We were right up 2 weeks ago. We traded right into the moving averages. We were right at the place where you would expect to see the potential for a breakout. I was talking about that at that time. PPMs were set, ready to move. It just took the price to penetrate and get above those averages. Never did it. It just completely just failed. So while all of this looks pretty drastic, and look at the weekly, the low so far has been 2193. 2199 is S2, so we're trading S2 right now. This is weekly Russell. S3 2175. Probably look at some kind of rebound over the next couple of days at least. Let's take a look at the daily quickly. And you'll see it got this is the daily cash Russell. We got a RTX buy signal there, but the possibilities are not really that exciting. We're looking at 2205, 2219 is typically what it will do. We could see more of a reversal, and a lot of times a lot of times when you come into this type of configuration and this volatility level, you'll see some consolidation before we go. I don't think we're in a full-out collapse mode. I should set up some numbers. I think I set up some pretty good numbers to look for that 4660 level on the S&P, and so you should have some good parameters here to watch out for. But this also saw this big reversal on the PPMs. PPM 3 is probably the most drastic thing on this page, where it's looking like we're probably going to see some sort of downward acceleration, and that's right where the market stalled, right at the 40-period moving average. And right now, yesterday was a huge reversal day, and this penetration, like I said, probably will set up a sideways range for at least a couple days, taking us into Friday. I think people will try to calm down a little bit as we come into the employment numbers. So maybe you don't want to be getting too short in this range at the moment. Just to give you a heads up, on Sunday night will give me an opportunity to unpack a lot of this stuff and to get in depth. So I will set up any patterns, start to come up with some Fibonacci projections and go into much more detail. I'm hoping that that video that won't be a live stream. It will actually be a produced video where I can put more work in it and give you some more context. But for the next couple of days, because of these STX buy signals, we should see some stability. And not everything that you saw in the markets yesterday was speculation about how many times the Fed's going to raise the rates, and this is more negative. So it was a pretty emotional day. Felt emotional. When we were in the live room yesterday, we were actually seeing a lot of the algo machine activity was huge. Yesterday there was a lot going on, and they perpetuated that pattern for the last 3 hours of trade. Actually, they were hammering on every time there was a little bit of a rally. There was a lot of selling. So they had a really good day yesterday. But I will go through more detail on this on Sunday night. I'm hoping to put a decent production video together for that. So let's get into the interest rates. We've got a vertical move going on here. PPMs are screaming up 1.62, 0.72. And 0.45. We did get, and I've seen these explosions before. We got an RTX sell signal, sell, and we managed to close higher. We stayed within context of the expectations yesterday. The high was 71. R3 was exactly 1.71. So we hit R3 for today, or coming into Thursday. We're looking at the R1 is 1.72, R3 1.75. And if I'll go to weekly, if you recall last year, let me bring that up. This high over here in March of 21 was 1.754. So we definitely have a retest coming. You might even be able to call this a retest. We're also getting an RTX sell signal on a weekly on the interest rate, so we should see some consolidation. But I've been talking about this pattern for the last couple of days, is that the PPMs are turning up. I want to put the Fibonacci indicator back on here. And this is what I was talking about last night. We've got 3 little mini targets. We got the 180 is the 200-week moving average. And then we have Fibonacci targets at 190 and 210. 2.12 and 2.25. So definitely looking like rates are going to soar here, and whether it's an overheating economy, I don't think it's inflation driving this. I really don't. I don't see that being the factor at the moment anyway. Let's take a look at those yield curves I was talking about. Yield curve is, you can see it upticked a little bit on Bob's favorite, which is the 530 spread, slight uptick there. I looked at the 210s. They were actually down 1 tick yesterday. So no expansion there. And this is the one thing that's happening. It's happening on the back end. It's already happened on the 20 versus the 30, but the 10/30s are actually seeing a contraction. We're at 38 basis points. So for putting your money out for 30 years versus 10, you're getting paid 38 basis points for that. It's not a very much of a premium. That premium's usually closer to 0.8, 0.9, and we're nowhere near that. And you can see up here, it was at the peak of this chart, it was at 0.8. That's where that was. So we've not only did it contract yesterday, it's been contracting, and that's what I've been talking about for a while from that standpoint. This is pretty significant on this overall curve and flattening that's been going on, not just in the last few weeks, but started back in July. And I was getting concerned over here around June, and then this last little slump, I've been screaming that the Fed doesn't want this to happen. This was the first signs that they were not controlling this anymore. They did a masterful job going back. This right here, where I have my cursor, is where the 2020 situation came. I remember people talking about zero rates and all. I said, no, they don't want that. They got this thing to steepen. Everything worked just as it was supposed to, consolidated, and then boom, it was lost control. Yeah, so I see LL's talking about they won't raise rates because the recession started. They will raise rates. Go back to, if the fear is for inflation, then they will raise rates. They're so out of control. They feel like, think about this for a minute. Okay, it's a really good question. Thanks for posting that. They have told the world, let me rewind completely. The rewind is they've been telling everybody every step of the way from Ben Bernanke forward, here's what our next move is, here's what we're going to do, and they do it, right? Full transparency, air quotes. Here's the deal. There's two factors that they have to be careful with. Is one, that I brought up on the opening comments, is that there actually is some, I guess, loss of confidence. That's what we saw yesterday. And that's one of the risks. And the other risk is they'll even lose more confidence now that they've been full transparency telling you what they're going to do before they do it. Now, if they don't do it, if they don't raise rates, then that will tell you that things are even worse. So they're boxed in a corner. So if they don't raise rates, everybody's going to go, oh my gosh, there's a recession coming anyway. So it won't matter if they do or they don't. The markets are set. So maybe we're going to see something interesting. I've talked about, I'll just go on a little mini rant here on the Fed, is every Fed chair that I've been around since Paul Volcker, 1979 is when I started in the markets, and Paul Volcker came in shortly after I started in the markets. And I've watched all these guys, and every one of them had to deal with a crisis. Paul Volcker was dealing with Jimmy Carter's, stagflation, and his job was to kill inflation. He raised rates in a recession to do so. So don't think the Fed won't do whatever they think they need to do. They're going to look through the Volcker era and what happened there. And if their job and they think they have to kill inflation, first they said it was transitory, now they say it's not. This thing could get really messy. There's no doubt about this. So like I said, in the heat of the argument, I don't like to make a lot of decisions here. Our models already have made a lot of decisions. What guides me and guides our customer base and all that is those models. And on an intermediate basis, we have actually raised a lot of cash. And that brings me to going to that. I'm actually want to bring that back up here really quick, because I think this will be an interesting thing to cover. It ties together with what I'm talking about here. So this happened in I'm going to draw some stuff here and just go into a little more depth here, and then we'll move on to these other markets. This was the peak in 2020, and we started seeing selling. The selling started to come in. These bars, I'm trying to mark the top of the bars. We saw this selling coming in right before this big drop here. Now, it's hard to see here because of the scaling of this graph, but it is actually same things happening. We get it peaked here, probably about midpoint of this rally, and then it got narrow. We got a little spike, and now we're coming into a liquidation. Like I said, we're down to you can't see that there's like a white bar over here. This chart is really terrible, but it is down around 28%. So we've completely collapsed down, and just like what we're roughly right here, when we go to the pandemic level, we're here, but the market is up here. So the potential is for the market to continue to liquidate here, and the trends start to negative trends start to unfold. And like I said, most of the portfolios and our institutional accounts and everything are already in 40-60% cash, and even those of you using WaveTech, for the most part, you're seeing the same type of things. Okay, so let's get back to the technicals, and I'll try to get through the rest of this stuff pretty quick here. I got a late start, and no dinner yet today. 12 hours later. So let's try to get through these last few markets fairly quick. So we'll touch on crude oil. I did not cover crude last night. Let me get over to the daily. So crude was down a little bit, but we're starting to see where the trend might roll over. There's good support right now at 76.20. Roll through that. We're getting a crossover of the 40 and the 21, which is typically a point where the market's going to pull back into probably potential 74, 73 on this market, and we should see it just consolidate above that level, above the 21 period moving average, which is 73.53, rising about 20 cents per day. Let's go over to the weekly. Weekly, I've talked about this. We still have targets at 86.68. So it's interesting. If there's a recession coming, then crude oil shouldn't look like this. We're going to have to see a big reversal in crude. But right now, it looks like crude is still heading for 86 plus, retest of the 84 highs. One of those two things will happen, 84 to 86 right now, potential for 96. So the possibilities, at least right now, there's only a couple things that could cause crude oil to go up and there'd be a recession, and that would be a disruption of supply. And that would have something to do with maybe something crazy happening in the Middle East, or something has to disrupt the supplies. But I still think the demand is there, and we're going to see at least the 86 plus level, which would be a retest of the 84 highs that we made in October of last year. Let me just get an exact date. Yeah, October 29th, right at the end of the month. So that's what this looks like. Let's go on to gold. Gold can't get out of its own way. It did it again. Really so disappointing. Everything was looking good. We printed up to 1833. This is a weekly chart. Let me bring up the daily real quick. That'll be a better place. So daily printed up, looked really good. Actually even was able to close at 1825. We opened tonight. We're down 16 handles back at 1809. I mentioned this number last night. 1808 is the number that you need to be watching. But PPMs are rolling over all of a sudden. This little reversal was not good. We had everything looking fairly good yesterday. This drop in is setting some risk up in the market as far as it going back under 1800 and maybe starting some other potential move back down to 77, the 1777 level. Let me go to weekly here. Weekly, like I said, 1808, that's right where we're trading right now. Got to hold there. Got to finish the week above that number. PPMs have some positivity, but it's not super robust just yet. Okay, final market. Is Bitcoin. Last night I was talking about there's a fair amount, a substantial amount of risk in Bitcoin right now. And we're trading down below this 44 handle that I talked about last night. We'll break this down just a little bit. Is 44 was a key pivot. We're trading right now 43,173. We're through the STX numbers, so we could get a little stability. But let me go over to the, before I do that, take a look at this. PPM 1 now is a minus 1.56, 0.58, 0.72. We're in full-blown downtrend in Bitcoin right now. Let's go to the weekly. So I want to back up just 1 second. One of the things we've been talking about, I've been talking about for weeks, is this 200-day moving average. We've been hovering just, actually on both sides, we've been hovering around it. Well, now this breakout really is substantial, and there's a target on the dailies right now for Bitcoin to 28,585. I just want to look at something here. Let's go to the weekly. Weekly is pretty close to the bottom end of the range. 44,058 was the S2 number. We're through that. 42,501, 41,281. That's the bottom of this thing. What's the low? 42.5. So we've almost printed STX. This is substantial. We got negative PPMs on a weekly basis. The ceiling on this market here is 53,000. I mean, that's a long ways away from where we are, but that is absolute ceiling. And now this is the other number I was talking about here. Let me just bring this up. Let me bring it on screen for you. So 43,730 is that number. We're trading below that right now. Next level after that is 34,000. So get ready. Be very careful with this Bitcoin, and that's going to be really tough to get to make any money. Okay. Come back on screen. That's going to do it, folks. Just remember, no video tomorrow night. I really apologize. I'd rather be hanging out with you guys than what I'm doing tomorrow. Let's put it that way. So I guess we'll call it quits. Like I said, I would do my best to try to come up on Friday after unemployment. I've got a very small window. Maybe I can come up for an hour or so, if not even that, maybe just a half hour just to get some sort of update. So once again, good luck trading next day and a half, and we'll talk to you probably Sunday night for sure. Okay, take care, everyone. If I don't talk to you, have a great weekend.